Welcome back, everybody, to another episode of The Shoney Show. And today, I'm absolutely thrilled to have an incredible guest on here. I know lots of people that have worked with him and have had incredible success with investing. Something that you've probably heard me talk about quite a lot as something that every single expert coaching consultant really needs to be looking at, because we're in dancing bear businesses. When the bear stops dancing, the bear stops earning. So investing and thinking about the future is so important. Now, Ben is also somebody that I know plenty of people that have worked with him who have been very successful with him also. But on top of that, I know that he's got a different strategy than my own, or I at least perceive a different strategy from my own. So I'm just so excited myself, from a selfish point of view here, to learn about his system, how he invests, how he teaches investing to entrepreneurs. So without further ado, Ben Knight, absolutely incredible to have you here. I would love you to give your own intro that beats mine, and you tell people exactly who you are, who you help, and how you help them.
Oh, thanks for that, dude. I don't know if I can beat that, but that was, that was great. But yeah, hi everybody. My name's Ben Knight, and I teach busy business owners how to invest in the stock market in less than 5 minutes a day.
Excellent, superb. Well, it's an absolutely incredible tagline, and one thing that I would say is already different from yours and mine is I spend way too much time doing what I do and thinking about it a little bit too much. I should probably be with my style, it should probably be just sort of like making the trade and then sort of like leaving it to do its thing, but I keep a little bit too much focus on it. So we'll definitely dive into a little bit of an explanation of exactly how that works, how it can be 5 minutes a day, what the expectations can be, and many other things. But if we can just dive into something, a little bit of a pullback, not about how you got into coaching investing, but how did you get into investing yourself? Like what did that journey look like? How did you get interested in it? How did you learn about it? And maybe even what was like your first trade? What did that look like?
Yeah, great place to start. So for me, like growing up in it, I always knew I wanted to be a business owner. Like that was the non-negotiable. It was never going to be any different. I never wanted a 9 to 5. That was just it. And I went through school thinking that, went through university thinking that, like did international business at uni, got out the other side and realised, I didn't actually learn how to start a business. Awesome job by our education system there. But so I thought, right, well, this is not good. I better start like trying to earn some money. So I started a few different businesses. I was doing like Amazon FBA. I even tried to learn to code mobile phone apps at one point, which was I'm not techie at all. It was not a good idea. But I was just so desperate to not get like sucked into the 9 to 5, which I guess I was kind of fearful of. And that's when I had the idea to start trading, because I thought, right, this business stuff is pretty difficult at the moment. I need to make some money while I figure out what business I want to do. So I hear trading's a pretty good way to make some money on the side. So started doing that. I will admit, started on my own and did it very badly for a while. Lost quite a bit, as a lot of people do. Finally ate a bit of humble pie and thought, right, I need to get some help with this. So, invested in coaching, courses, etc. And got fairly good at it. And I actually really enjoyed it. So that was kind of like my first taste of making money outside of the normal system, which sounds all right. And people think the trading lifestyle sounds great. And I was doing that for 4 solid years when it was just like my sole source of income. But by the way, I would now look back and think that was a job rather than an investment, because I was working as much as anyone doing that. And to be honest, I hated it, because it's just you sitting in front of your screen all day, watching lines go up and down, like not anyone's idea of fun, right? So I was like, I need to get out of this. But I didn't want to lose the income. So I created my strategy and sort of simplified it, dumbed it down, if you will, to where I could do it in such a little time, like 5 minutes a day, that I could have plenty of time to go and do what I actually wanted to pursue, which was a business. So yeah, that was kind of my intro into the investing world there.
Excellent, superb. And between what you do now and what you originally did before you knew specifically how to trade and you had your system, what was like a couple of things that were different, wildly different, marginally different between what you did then when you lost money versus what you do now when you make money?
Oh, so many. So first one was probably not having a strategy that I followed religiously. I had a bit of information, which is always a dangerous place to be, because you think you know it best, and you obviously don't. So I was doing things that I thought might work. It felt right at the time. I was like, oh, this feels like a good one. Terrible idea. Like, if emotions get involved in your investing, you're going to lose. It's kind of the lesson I learned from that. So that was a main one. But just having, I'd say, the discipline to follow simple steps, or not having simple steps at all, probably at that stage. I was trying to do the most advanced stuff, the most difficult strategy, because I wanted to be, like the best of the best, but which is what everybody starts with when they start trading. You probably know that like a ridiculous percentage of traders lose money when they start. Well, it's because they start with the really difficult stuff. It's kind of like it'd be like you trying to kick a football for the first time and then expecting to play in the Premier League the next weekend. Like, it'd be nuts, wouldn't it? You wouldn't think you could do that. But with trading, people think, oh, I've watched a couple of videos, I'm ready.
Yeah.
It doesn't work like that, unfortunately.
Yeah, I mean, I've heard of a lot of coaches over the years, of course, speaking to them as well, and it's almost like their assumption is it's a quick switch to go from coaching to trading, and trading be like this like silver bullet that's going to make them rich. And I
Mhm.
mean, unfortunately, the word trading has sometimes a negative connotation around it because there's a lot of these accounts out there, and then there's like a million comments in your post that you just put out that says, I'm so grateful to so and so for helping me make money. And it's like,
Yeah.
expert trader, multi-millionaire, so and so. And when you see some of these videos online that it's like, exactly what actually happened, it can be a little bit scary. But I mean, I wouldn't have any of those people on the podcast. The reason that I'm so like happy to have you on the podcast is because I literally know multiple people that are working with you that have done exceptionally well. So I know that you've got a unique system, and they ran me by it in a sense of like, so no, it's more like this, and then you do this, and then you do this. So if you could actually talk through, what does it look like? Like, what is the 5 minute a day system for trading? How are you picking these trades? How long are you holding them for? What's the expectations? If you can give a bit of a snapshot.
Yeah, sure. Well, the first thing I want to cover there is the actual difference between trading and investing. Because they're words that get sort of thrown around interchangeably, but there actually is a difference. And not many people know this, but it's time frame. That's the big difference here. So if you're buying something and trying to sell it within the next few seconds, minutes, sometimes days, that's trading. That's probably what comes to mind when you think of it. Whereas if you're buying something and you hold it for maybe some weeks, months, even years in extreme cases, that's investing. So there is a distinction between the two. And I used to be trader, which is what has the bad rap. But to get a less stressful life, I have transitioned fully to what I now call medium-term investing. So to answer your question, I'm in trades for, on average, 6 to 10 weeks, it seems to be. So definitely not a quick in and out sort of job, but equally not, Warren Buffett, park your money and leave it for 10 years, right? So that's kind of the timeframes I'm working with. But to be fair, I'm very much under the mindset of, if I should be a little bit more patient, and that's going to mean I do get the profits I want, I'm prepared to do that. I'm not in a hurry, which I think a lot of people make the mistake of. They're like, oh, I need to get rich quick, or I need to do this fast, and otherwise it's not worth. That's sort of a road to disaster. So I think the first mindset shift people need to have is, would you be willing to be a little bit more patient but get better results? Probably.
Yeah, yeah. Like that is one of the biggest issues I've seen whenever somebody's lost a lot of money. It's usually the trades in which they're trying to double their money within 24, 48, 72 hours. So it's
Yeah.
about the coin that they just heard somebody talk about on some crypto channel,
Yeah.
or it's even going into Bitcoin because they're like, well, as soon as it does go up, it's going to triple. So it's an easy place to park money right now. But we really have no idea about it. And the same thing, sometimes they hear on CNBC them mention a company that they couldn't describe, they couldn't relay to their partner that evening what the name of the company even was, but they want to put an investment into it because somebody that owns a hedge fund says that it's probably a good play for the year. So there's no sort of process around it other than hearsay. So what's your process for picking a good company to invest in?
Yeah, great question. And you've hit the nail on the head there, because I only focus on stocks now, right? I don't do Forex, I don't do crypto, purely because I like the idea of, I know what a business does, I know what they sell, where they are, all of that stuff. It's easy to find the information. So that seems more logical to me. So that's the first thing. But how I choose it is also, I have a 13-point criteria, okay? Like a checklist. And if a company meets, this, and this, it's good for me. Okay, so I'm not reading news articles. I'm not listening to Bloomberg all day, that kind of thing. I'm personally not a fan of that at all. I think, and not to get into this side of things, but conspiracy-wise, but I think the news we hear, we're not hearing it at the same time as the big guys that are hearing it, right? The institutions, the banks, they've made their moves on all this news. So us little guys, we get, not the best end of the deal, put it that way. So I think if you're listening to news and things like that, you're probably going to be a bit manipulated. So I disregard all of that. I don't read articles. I just look at the data. Numbers don't lie. That's kind of my approach to it. So yeah, I've got my 13-point checklist, which you could call my secret recipe, if you will. And I know that if it meets this, it's a solid company that I'd be willing to invest in.
Excellent. And what are like one or two of those things that would make it a company worth investing in?
Yeah, sure. So, I mean, firstly would be like the size of the company. So people might have heard the term market cap, market capitalization, essentially the value of the company. Logically speaking, if you're investing in a company that's worth a few million or a few hundred million, I know it sounds a lot, but that's quite close to zero. Yeah, and the smaller the company, the more risk you inherently take on investing in it. So for me, I'm not interested in those small companies. I want solid companies. So I'm looking at like 2 billion plus, all the way up to like 2 trillion, if you will, on like Apple and things like that. So yeah, I'm definitely at the higher end of the scale there. And even similar with income, like I'm not investing in companies that are making a loss or making a small amount. I need them to be making a solid amount of income there, a bit of stability. And like that's not groundbreaking stuff there. I want a large company that's making money, but that simple logic is actually what separates a lot of people who lose from the people who make money with this, which is quite an interesting thing. People want the next, like you said, silver bullet. Want, this is a risky one, but it's going to blow up.
Yeah,
maybe not.
So you don't look at anything about like what you believe is coming up in the market that could move companies outside of the fundamentals. So you're actually looking at the company fundamentals, do the numbers in the background make sense 100%? Is there anything that comes into it with like, hey, there's talk about the recession coming in, I believe it, I believe there'll be a recession, and I believe that'll create panic in the market and a sell-off? Or like, does any of that type of stuff come into it? Maybe even like there's news that Tesla's taking out a new car, or they're close to autonomous driving, or something like that, and you're like, this is going to be a good play. When that news story comes out, there's going to be a huge pop. Does that come into it at all here?
Interestingly, it wouldn't come into me selecting a company, but when I get into the company. Okay, gotcha. So I won't be reading, like if Tesla's got a new car coming out, whatever, irrelevant to me. I just need to know the numbers on that data up till then. However, if you said like the recession or whatever it may be, part of the strategy is when to get in. Just because it's a great company doesn't mean it's a great time to invest now, which is again is a big problem. If people ask their friends, "Oh, what's a good company to invest in?" Their friend says one, and they just throw a bunch of money into it. It's like it's crazy, right? It's like if you've never watched football before, and you say to your mate, "What's a good football team?" They say, they give you a team, and then you just go and place a huge bet. You wouldn't do that, but with investing, people blindly follow advice, which is nuts. But so yeah, just because I find a good company doesn't mean it's ready to go right this second. So what I do, I actually do look at what has happened since the last crisis. For me, March 2020 is a really good reference point. Obviously, the world went a bit nuts and everything happened in the market. So it's good to see, how does this react? How did it react when the whole world was going crazy? Like, that's what I want to know. Like, how does it behave under tension, so to speak? So I do use it for that. So I do take into account those things, but more so as to when do I buy into this then? Does that make sense?
Yeah, absolutely. I mean, like, I think from what you're saying there, a similar sort of thought process as myself. It's like when I watch things and I see there's like a little bit of news about a company, and it's even like when so I forget his name, it's Josh something on CNBC, funnily enough. But I love his take on things. He's very direct, and he doesn't take any BS from who else is on the panel as well. He's like, no, that's absolutely wrong, and just like says it how it is. but he was saying about Amazon. This was when the stock went all the way down to like $80 a share, and it was like a huge crash in well, it was like a year and a half ago. There was the big tech crash in stocks. So there's a lot of opportunity there. And he was saying when people were like, oh, but there's like low profitability and there's like this is coming down, this is coming down. And he said, well, there's only two outcomes here. Either they grow or the big guy comes back, Jeff Bezos, and it's a big news story and the stock literally doubles in the space of about 48 hours. So he said, if you're not willing to hold the stock for a little bit of time to ensure one of those two outcomes, don't get into it. But if you're willing to hold the stock for, it might be 4 months, it might be 2 years. He was like, that's what's going to happen because news is going to move the market. So it's quite an interesting one to try and work between fundamentals, but then also take into account these types of things for sure.
Yeah, I'd say there's definitely strength in both, but probably picking one and sticking with it is anyone's best bet. The people have is if they sort of jump between two ideas, two methodologies, because then you're just going to get confused and you're probably going to have a bit of bias. Like cognitive bias, like if one thing supports what you think and the other one doesn't, you're going to sort of ignore that one and go for the one that we all do it. So whereas if you've only got one strategy, you can't do that, right?
Yeah, 100%. Which actually brings me nicely into another question that I had for you, which was about bucketing. Like, do you have like 20% of my investments go towards this type of thing, and then like 80% goes here, or is there anything like that, or are you like 100%? This is the system. 100% of my investments are done in this style, or is it like 80% are done with your formula and 20% go into index funds and slow growth compounding? Like, is there any sort of bucketing there, or is it just like 100% into the system?
Yeah, really good point. So 3 years ago, I did an 80-20. So I was 80% in my system and 20% actually in cryptocurrencies, right? Obviously, 3 years ago was quite a nice time to be invested in those. And I thought I was very intelligent at the time. Obviously, that didn't last too long, let's say. And I slowly moved that 20% back over. And to be honest, I haven't found a reason to not be 100% into my strategy. Now, I will be clear, it's a low risk strategy. It's not that glamorous. It's not going to like let you quit your job by next week. It's not one of those. So even though it might sound risky to go all in one place, because it's a low risk strategy, it's kind of not, if that makes sense. And I can invest in different companies and stuff, which sort of is the diversification there. So yeah, I'm all 100% into this. And risky or not, even my savings, like I use that as a savings account now. I don't use a bank traditional savings account because, well, for an emergency fund, yes, but not my day-to-day saving. There's no point for me. I think if it's going to lose money there, I'd rather have that extra little bit of risk in a investment and see it go up.
Excellent. And how many different stocks or companies are you in at any one time?
Maximum of 5 or 6.
Excellent.
Maximum of 5, because interestingly, a lot of people think, oh, if you want to diversify, everyone loves the word diversify, you risk and all that. I think you need to get into more and more stocks, investments. It's not strictly true, mathematically speaking, because each company or each investment has its own separate risk. So by getting into more and more and more and more, you're just taking on different risks all over the place. And for me, I'd rather have to make 5 good decisions than 25 good decisions, right? Yeah. So for me, sticking to 5 or 6 investments at once, it saves you a lot of headspace, less stress to manage, which is why we can do it less than 5 minutes a day, right?
Yeah. Brilliant. Love that. Well, do you want to tear some of my ones apart and tell me if it's a good trade or a bad trade? Well, you don't have your system and your calculator in front of you, but they're well-known companies, so you might already be well aware of whether you would trade, not trade, get out now, or whatever it may be. So I can just tell you what I've got at the moment.
Go for it.
So even though I would have been about 80-20 originally, and I would have been like 80% in index funds, 20% in stocks, definitely with some success with it, I think I've lent a lot more towards it. It might be 50-50. It might even be a little bit more in individualized stocks.
Mm-hmm.
But the individualized stocks that I do have, I've only got 4 of them, and I'm pretty heavily into those ones. So a bit like yourself, they are never more than, like, I'm not trying to diversify. If I want to diversify, I'll get the index fund.
Yeah.
Like, I'm going into these because I believe in the companies. I believe I understand the companies, which is why I chose them in the first place. And when that big crash happened, like a year and a half ago in the tech space, I just was like bewildered by the price point of these companies that I felt like I understood, which
Mm-hmm.
is why I went into it, and then I continued to invest and still invest today. But the companies are priced a lot higher now, so you might tell me to get out. So here we go.
Well,
So
before we do, Neil, I need to know, what was the outcome? What's the goal here?
with one company more than doubled in less than a year.
Mhm.
Um, Another company is about double in about a year. Another one is just short of doubling in under a year. And then the other one is about a 40% loss. So I'll keep the worst for last, and then you can tell me about that one, because that might be a bit of a giggle fest anyway. Right. So the first one, as you can imagine, with that sort of mindset of invest in what you understand,
Mhm.
Meta, right? So obviously I teach Facebook ads. I understand the platform. I understand, and I'm always up to date with what's working, what's not working, etc.
Mhm.
And so when their stock went down by like 75%, I was like, that is an absolute joke. If I had to bet on anybody making more money, it would be Mark Zuckerberg. So I went in quite heavily on Meta. It's now, I think, maybe like 2.5 times up. So a big return on it thus far.
Mhm.
And I would imagine, with them not being at all-time highs, that there's still definitely room for growth. But I'm interested to know from your fundamental analysis, is this a sell, or is this a hold, or is this a add to the pot?
Great point. So I'm just getting it on my screen actually, just so I can see the fundamentals for you. But on the face of it, by the way, I was actually invested in Meta as well. So, make of that what you will. I
Totally.
think I had a very similar outlook to you in that I regard them as a company that's not going anywhere anytime soon. And while their earnings may not be amazing this year, opposed to last year, I think the overall outlook there actually looks very strong. I think don't say their downfall could be, or their limitations probably, and you know this way more than I do, like the industry, you're more into it, but bad news travels fast in the social media thing. So, with the Cambridge Analytica thing and all that stuff that happened, that was a bit of a catalyst for the drop, right?
Yeah.
So it is very open to that kind of stuff. Now, as I said earlier, I don't actually pay too much attention to that, because if the numbers are solid, my thinking is, if a company's great and then a news article comes out that day, the next day it's not suddenly a bad company. Yeah, they're still doing the same thing. They're still as profitable, all of that kind of stuff. So I'm actually cool with it. So yeah, I think it's a solid one. My only thing would be, when's the time you get out of it?
Yeah. That's my question at this stage, because if I was to look at it as a company and its valuation and everything, and what I believe about it and where I believe it's going to go, I would say that it's still to be added to. I'm not expecting anything that I would add to the pot right now to double or triple like it previously did. I think I got an absolute steal of a price point. But I definitely think there's room for growth. But this is nothing more than me looking at it compared to all-time highs and saying what was special about the company then versus what's special about the company now. I mean, and when we were talking 20 minutes ago, maybe, well, no, it wouldn't have been 20, maybe 10 minutes ago, about news stories, Cambridge Analytica helped the stock come all the way down. Simultaneously, the moment that they said they were sacking like 40,000 people and their wage bill was going to go down super, super significantly, that was like stock went through the roof. It was like 18% up in a day. It was bonkers. But I'm also, I don't know if this is the same for you. Probably not with the style of how long you hold things for. But you see, when I'm about 11 months into a stock, I'm like, if I hold it for an extra month, it's long-term capital gains. I pay less in tax. So I'm like, my outlook becomes, do I think it'll still be in the same position or better in a month's time so I can get the lower tax rate on it? I don't know if that comes into anything that you do.
Well, it doesn't, but only because I'm not in them that long. To
Yeah.
be fair. So it doesn't actually come into play. However, what I think the difference between how I approach things and what it sounds like you approach, for me, before I get in, I know when I'm getting out.
Yeah.
I don't mean in terms of like when it hits this price, I'm going to sell. I don't do it like that, but I do have a very step-by-step system of like when it gets to a certain point, I put a stop loss in to lock in that profit and secure it. And if it goes higher, great, I can bump that up. But if not, I'm out and I'm cool with that. I need that in my strategy because, as I said before, when I first started, emotions all over the place. Like, I think this is going to keep going up. I won't put, and you fall foul to it. So for me, I've got that in there that these are the steps to follow when you're in profit. And then the strategy decides your fate. It's not you. And that's quite a nice, freeing thing to have there, if that makes sense. But if yours is like more longer term, then kind of a different outcome there.
Yeah. Well, the stop loss is definitely a strategy that I haven't brought in, and definitely from this talk, even just you mentioning it there, it's definitely something that, especially if I've already held something for 12 months and it's already done really well, it'd probably be a great thing to put in place. So yeah, I'll probably definitely look at that afterwards as well. Second trade was Amazon, right? So Amazon, again, massive crash. They're a company with not a lot of profitability anyway. They have extremely high revenues, of course. AWS is the thing that is responsible for so much of their profitability. But when the crash happened and it was just all tech crashed, they were one of the ones that sort of came down with it. And again, it was that old thing of, do you believe in the business for me? And I was like, I would bet my life that Amazon will find a way to further profitability, to making more revenue and all of those good things. Even like that thing of it's either going to grow or the big man's going to come back and it's going to be a news article and you'll get your double there. So I think I'm something like 70 to 80% up on that trade. I believe at this stage. It's definitely not at double yet because I think it's trading at like 142 or something. I think I got in at 85, something like that. I don't know, something like that. But what's your thoughts on Amazon as a trade now?
Right. So for my strategy, I wouldn't be going for Amazon. For some of the reasons you mentioned, to be fair, like it's not like as liquid as I like not easy for them to generate cash as quickly, slightly high debt, that kind of thing. However, having said that, the reasons you gave make a lot of sense too. Right. So I think it seems actually, I agree with you. I can't imagine Amazon going anywhere, right? There's no way that they're going to fail. They're one of the most powerful companies, I would say, there is. So with that in mind, I liken it to Google. Like, if there's World War III tomorrow, they're probably going to be all right. That's kind of how I assess these companies. So in that sense, I think it's a great longer term one, especially if it drops. It's kind of on sale, right? Which is what you picked it up at. You picked it up on sale. Great, you're going to get that. And 70% of the year is phenomenal. So I think you've done very well there. But yeah, for me, it just doesn't fit exactly what I look for. But I'm also cool with that. Even if I know it's a good investment, but it doesn't fit my strategy, I won't go for it. Just for my ease of like trying to keep my discipline and things like this. And maybe I miss out on some great opportunities like this. But again, I'm trying to do this in less than 5 minutes a day. So I've got systemized, right?
This took way too much time for me to make these decisions. And it takes up way too much time for me to be checking this like 3 times a day to see what's happening. Okay, right. I'll tell you my third good one, and then I'll tell you the embarrassing one that I still unfortunately hold right now, and maybe you can give me some advice around that. So the third good one was Tesla. And I was that old person that said like everybody was just buying into Tesla that has this like ridiculous multiple on it and blah 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 blah. And I was like, it's totally overpriced. I would never get into it. But then there was the massive crash. And I was like, well, if there's one company that I believe in going forward that is going to continue to grow, that is going to have the right quarterly numbers to continue to create that euphoria. And then also, if I believe, and I do believe, in that robotaxi will be a thing, and whether that is, well, he said by the end of this year he reckons it will happen. It won't. But you know, if it was to happen next year at all, like that whole idea of Tesla is a car company as it stands at the moment, but if they go into robotaxi, they become like they'll have the margins of like an online business, like a tech company.
Mm-hmm.
So from my point of view, I was kind of like, right, it's massively on sale. A lot of what trades and what happens around trade prices with companies that are successful and continuing to grow is going around all-time highs, right? So it was so far off of its all-time high that I was like, this feels like quite a safe bet, continuing that it's going to be profitable going forward. And then longer term view, I also believe in it becoming robotaxi and that creating a whole different marketplace and then being the only people in the marketplace in that moment. So that was my in for that one. That one's got a better return, I believe, than Amazon. So I think that's number 2. Meta is number 1 for me. So what's your thoughts on that? Because I know this is like if nobody's ever traded before, they go in and buy Tesla because somebody said on YouTube to buy Tesla. Please don't do it based upon this episode. Like, this episode is not like your stock picks, right? I just want Ben to like tear these apart, tell me why I'm wrong, and help me get out of the fourth one that I'm about to tell him about.
Of all the 3 stocks we've spoken about, Tesla is my favourite, and one of the big reasons for that is like the fundamentals are very, very strong. And it's really strange because it outperforms any other car company that you look at on there. Like, it's not even remotely close to anything. I think I'm right in saying, don't quote me on this, but it's worth more than all the other car companies combined. Something ridiculous like that. Like,
yeah.
In terms of market cap, which is nuts because it's worth like 800 billion at the moment, which is obviously huge. And the reason is it's not a car company as such. It's a tech company. Or at least that's how it's viewed by investors. So if you look at it on paper, all the data, it matches a lot of tech companies very closely and doesn't look anything like a car company, which is a really strong thing, I think. And I agree that I think if one company is going to innovate, is going to get themselves out of any trouble that there might be further down the line, there's not a much more forward-thinking company than Tesla. So, yeah, I really like them. And the other thing is when they move, like the stock. A good example is like if you invest in a company, I'm going to say Kellogg's. Everyone's heard of Kellogg's, yeah, cereal company. When they move up, they move at like 5%, 10%, 13%, that kind of movement. Well, if you're investing in a company like that, you can't really expect to make much more because it just doesn't move a lot. Whereas Tesla, they move like 30, 40, 50, way beyond that percent every time they do a big movement. So just simply speaking, you've got a much better chance of making a decent sized profit. Now, equally, they do move down a lot more as well.
Yeah, I was about to say they're quite good at moving down as well.
But if you believe in them like we do, I think it's a very interesting investment to look at. Obviously, not. Yeah. I wouldn't say just go and throw money into them, do the research. Yeah. But, I really like them.
Excellent, superb. Right, now I'll tell you my fourth one, and this is the one that hasn't performed so well. This is Peloton, right? Yeah, exactly. Yeah, thought that might be the case. So here's my reasoning behind why I went into Peloton. I looked at Peloton like buying a company rather than buying Bitcoin, because I was like, for a small percentage. So it is a small percentage of my overall investments, but still, you know, it was a few shekels, and I still threw it in there on Peloton. And I also have Peloton tread. Like, I've got the Peloton treadmill. Like, we've got it in our house. We use it. I like it. I originally said, before they even said and came out, that they were going to start focusing upon subscription model rather than actually selling the machines. It was about the classes and the diversity of the classes. I said to my wife, like, the genius thing here is if they start selling all their classes, because people can do this like in their home. They don't need the equipment. So I believed in it, and I thought it's a stock that was at 160 a share, and it was down at $9 a share, right? And so I was like, it's got to move. It's got to have some movement north, right? And funnily enough, I bought the stock, and it went up to like 10, then it went to like 10 and a half, then it went to just short of 11. And that's a decent, it doesn't sound like a lot, but because it's like 9 to 10 and a half, that's a decent chunk. It's like 15%, right? Or 10, 12% or something like that. So decent chunk on the move up. And then it just started to come down and started to come down. And then there was all of these class action lawsuits and all sorts that happened. And now it went all the way down to like $5 a share. So it's basically came down like 48%, something like that.
I just had a quick look. It's at about 460 at the moment. It's sitting at.
Yeah, it's not a great position.
It doesn't look great, I'll be honest.
Yeah.
What was your outcome when you first got into it? What were you thinking? Were you like, if it gets to X, I'm going to get out, or I want to hold this for a year, see what happens, or was there a...
Well, because it wasn't a big percentage of what I was putting in there anyway, it was a bit like the equivalent of putting a small percentage of your investments into things like crypto and Bitcoin. It was more of like, if I lose it completely and it goes to zero, it's not going to be a huge like issue, but if it doubles, triples, quadruples, then it'll be a meaningful like bump to the overall profits of the account. So that was my outlook on it, because I was thinking more along the lines of, it's not going to get to like COVID numbers. Like that's why it had $160 stock price, because they were selling like crazy, because everybody wanted to continue exercising, but from the comfort of their own home. So that's unlikely to happen. So they are not going to get back there. It's highly unlikely unless something else happens. But my perception was that it could certainly get back to 20, 30, 40 by simply being a good business again. And the people who had previously bought Pelotons, and it was like a saturated market, they're aging up, which means that people below them are aging up, and they become part of like the target demographic. So I thought the subscription model was good. And then the third thing that I was kind of like, oh, well, here's a side thing that could go well, is I feel like at their valuation now compared to where they were, they're an acquisition target. Like they could get bought by like Amazon or another company that does sports equipment, right? So like they could be acquired, and then that usually comes with a bump as well. I mean, that bump would maybe take me back to my stock price, my buy price at best. So it's definitely not the way that I would look at it right now. But those were my three things I was thinking when I got in.
Okay. Well, looking at it now, I mean, the outlook isn't ideal, we'll say. I personally, if I were in your situation, I would be looking at, all right, it wasn't a huge amount of my capital I put in the first place. I don't want to lose this, but, you know, if things go bad, it's not going to ruin me. I would probably just be patient and wait for it to get back to break even. And, you know, if it's to tip above break even, get a stop loss in, and then, you know, the worst case scenario then is you break even, you get your money back. Yeah, that would be kind of my outlook. I wouldn't be thinking, oh, I'm going to make 20, 30, 40% on this. I might just be like, look, I'm going to chalk this one off to experience, and if I can get out my money back, amazing. That's kind of what I would look at. But again, I don't know much about their operations, what they got coming up, that kind of thing, because I don't focus on that. I can only focus on the numbers, and that's probably a hindrance sometimes, but it's also a really strong point to be from as well, because you don't get sort of tempted, or you don't have like skewed opinions. It's just like, once this improves, then I might consider it, but if it doesn't, I'm out, kind of thing. So obviously do what you like with this one, but I would personally be looking to, as soon as it gets to break even, I'd be jumping ship.
Well, today today I would take break even. So I mean that you're certainly looking at it with positive eyes. So we'll see what happens with it. I will hold it and see what happens. If it gets back to like $7 or $8, I may as well. I might just take it out at that stage unless it was looking a lot more exciting. But if they keep getting sued for everything and doing recall of bikes and treadmills for everything that's ever gone wrong with equipment ever, then yeah, I might just have to bow out and take it as experience. Luckily, it's not even marginally close to what I put into the other stocks. So, but yeah, I certainly I don't want a loss on the spreadsheet, but it might need to be taken. So all good. We'll wrap up with one that's a bit more actionable, which is there'll be a whole bunch of coaches right now, or experts, consultants even, outside of coaching, entrepreneurs in general, to be fair, that could be listening to this and thinking, right, it sounds good, it looks good, I see why people would invest and don't just, spend what they earn or put into savings and let it dwindle away based upon inflation. What is somebody's first step, like, to get trading? Is it like, hey, everybody, like, the first thing that you need to do is just go and open the account, like go and open the investment account? Or is it more direct in terms of you need to make your first trade, and this is what I would suggest that you do? Like, what does that look like in terms of somebody getting started? What's your step by step?
My first bit of advice would actually be not to do either of those things. So opening an account and placing your first trade would probably be the biggest mistake you could start with. Because one of the things is going to happen, right? Either you're going to lose money and then be like, oh, trading's ridiculous, I'm out, like, because you didn't know what you're doing. Or, probably more dangerous, you'll win and you'll be like, this is easy, I'm just going to plow more money into it. Either of those outcomes is not good. So I wouldn't do that first. My first point of call would be, does this actually suit my lifestyle? And this is probably something people don't think about. They're like, oh, property's good, trading's good, like, but does it actually suit you and what you're looking for? So I'm going to speak from my point of view, obviously, how I do things. If you're somebody who has, like, what we do takes 5 minutes a day. If you're somebody who has a completely systemized business, you got all the time in the world, you could really delve deep into something, then what I do is probably not going to interest you, right? Because we're not going super deep on it. We're keeping it simple, straightforward, to the point. So maybe that's not suited to you. Whereas if you're somebody who's like tight for time, like very busy all the time, then that suits you a lot better, obviously. You might be someone who's like, I actually want something that's going to grow. I want to like something physical, tangible. Well, maybe property's a better way for you to go. That kind of thing. So you really do need to sort of think about what is a good route for you. Now, if you do settle on, oh yeah, I think investing in stocks would be a good idea. I think the first thing you've got to do is what I like to do with anything new. How can I try this with the least risk possible? Right? So the great thing about trading is you can have a demo account. That is good, which is obviously virtual money, that kind of thing. But again, you don't want to be placing trades just for the sake of it, because you don't know what you're doing. So it's like just shooting in the dark. It's gambling, essentially.
Yeah.
So I would be trying to watch some things, see how people present, see how people talk about what they're doing, and see what resonates. Because you might have the best strategy in the world, but if I can't relate to you, or I can't listen to you and follow what you're saying, well, I'm going to lose as well, right? So I think you really do need to find the sort of style that suits you as well. And that could be the strategy or the person teaching it, or wherever you're learning it from, a book or wherever it may be. So definitely look around a bit. I don't know what you think about your thoughts on that, because I'm sure you get that with your clients as well. Like, you can jump into things and go all in on Facebook ads on day one and stuff like that. But if you don't know what you're doing, the outcome's not really a fair representation.
Yeah, that's actually a good analogy there. It's like a lot of people go, Facebook ads will solve the problem. But it's like, where are the Facebook ads going? Where are you sending people?
Yeah.
Are you doing a lead magnet? Are you doing a 5-day challenge? Are you doing a paid challenge? Are you doing a live masterclass? Are you doing this, that, the other? It's not that Facebook ads work. It's that the right system works for you, and you're just flooding that system with Facebook ads. So yeah, definitely true there that everybody's an individual. And well, my takeaway from what you just said is everybody's an individual. So they need to find their own style of investing that's going to work best for them, their schedule, what their outcomes are, their horizons, all of those different bits and pieces.
100%, because like, to be straight, if it doesn't suit you, you're not going to stick to it.
Yeah.
Like, you want to be learning a skill that you're going to use for the next 20, 30, 40 years, not something you're going to do for a couple of months and give up. Nobody wins then, right? So, yeah, it's got to be something that suits you, for sure.
Excellent. Well, let's say that they are the person
Mm-hmm.
who has 5 minutes a day or a small amount of time to focus on investing, and they want to take you up on your strategy, or they want to find out more about your strategy in general. Where can they go to find out more about it? How can they find you and what it is that you do?
Yeah, so I'm a big fan of seeing something first before you decide if it's for you or not. Because obviously, if I start telling someone about something, I'm biased. Yeah, I like what I do. I like people to see it first to really say if that would be good for them. So what I do, I put on a lot of webinars, which are free to attend. And what I do on there is just show people, sort of peek behind the curtain as this is what it actually looks like to implement this. Because you'll see it and you'll be like, oh, I can so imagine myself doing that. Or I could not do that. Either way, that's a good outcome for you, right? Because you've made a good decision. So yeah, for me, if people want to see what I do, come along to one of the free webinars. You can sign up to them at the website www.thetradetribe.com. And there's loads of information on there as how we do things, our ethos, that kind of thing. Because you'll know, Neil, I'm very big on community, like, which is why it's called the Trade Tribe. Yeah.
Yeah.
As I said at the beginning of this chat, I was very lonely doing trading on my own, and I always wish I had people to sort of bounce ideas off and stuff. So that was one of my big drivers for growing this sort of thing. So yeah, seeing what the Trade Tribe is all about is, I think that's probably the first step you need to do, even before you think of the strategy. Because if you don't like people and you don't like sharing ideas and stuff, it's probably not the right place for you either.
Brilliant. Super. Well, what we'll do is we'll drop down below here on YouTube and on Apple Podcasts and everywhere else. We'll drop in either that website to go through or a direct link to sign up for the webinar, one or the other or both, so that people can go through if they're interested in seeing behind the curtain and everything that you do. So other than that, my friend, just a big, massive thank you. This has been absolutely amazing. Thank you for saving my ass with Peloton and letting me know what I'm supposed to do with that absolute shell of a company in my eyes now. So at least I've got some direction with where to go. I'm sure this has been really, really valuable to everybody. If it has been valuable, hit like button, subscribe button, and all that good stuff. But other than that, my friend, just a big, massive thank you to you. You've delivered massively, and I'm sure we'll have another conversation in the future as well.
Thanks for having me, dude. Really appreciate it.